Good morning, everybody. Today is the 20th day in the month of December 2021. My name is Heritage Adisa, market analyst at HotForex, and quickly we check through the markets and see what the dominant sentiment is, see the opportunities, and then how we can take advantage of it. But please remember, this is just the communication material, and nothing in this communication should be considered as investment advice or recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainties, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall market environment, the overall mood in the market is a more risk-off environment. The fears of the Omicron strain, the spread of the virus around the world has been gripping markets, and then we've seen equities and risk assets generally down on the day. Right here, I have this article from earlier, right? Risk perception is dominating financial markets to start the week. The surging number of Omicron cases globally, right, and heightened concern over tightened restrictions, right, triggered flight to safety on Monday, right? Across the world, there's been massive rise in the amount of cases, especially the Omicron strain, around the world. Netherlands has announced a full lockdown, right? The first, country in Europe to announce a full lockdown. In the UK, they're also talking about restrictions here, restrictions there. Yes, non, concrete just yet, but I mean, it's there. Germany talking about restrictions as well, right? Around the world, it's been like that. And then you look across board, you see market participants are not really looking to take more risk, right? Oil prices are down this morning, equities are down this morning, right across board. High beta currencies, especially the commodity currencies, are also down. I have flight to safety, some currencies up on the day. Apart from even the COVID, aspect of this, on the US side, U.S. Senator Joe Manchin as well also announced that he won't be supporting or voting for President Biden's, Build Back Better Act. That's one of the bills they've been trying to push for a long time now, and that's a major stronghold there. And then with that also coming in mix, we also have, back and forth again, back with the political side of things again, and then all of that still bodes to a, risk of environment like we're seeing in the markets this morning. Looking across board, with equities. Right, we've seen downside on the day. Right, this is the US 500. We just move this away. Okay, this US 500 here. We're seeing weakness on the day, and this is very typical to a risk-off environment where you have equities pushing lower. Equities pushing lower, on the day. If you look across board, it's a similar story down across board. Equities generally are bleeding on the day, which is typical for a risk-off environment like we're seeing right now. Right. Apart from that, if you look at the VIX is also well supported, ways above 20, approaching 25. I mean, also saying that there is more fear in the markets, more, fear, especially for the US 500, right? Seen there, as evidence here on the VIX. If you look at oil prices, for example, as well, oil price also lower, broken below 70 on Friday, and then we gapped lower as well in today's session, and now we're even lower, down by about 2.44%, on the day for oil. Bonds are just a tad supported, but not really, giving us so much in terms of the difference in the moves compared to, other asset classes that we've seen. But that's what we have, in today's session. We're seeing it elevated across board. And then obviously in a risk of environment, you expect bonds to also, be supportive. And you look at the last couple of sessions, we've really kept up ways above 130 since we, retested it, right? Showing the amount of fear in the market, showing flight to risk, showing the high demand for, safe assets like bonds. On the FX side, we have weakness for currencies like the high beta currencies, the Aussie, the Kiwi, the CAD, even the pounds, right? Actually, with in the UK now, we also had one on the political side where their negotiator for Brexit, that's Frost, he also resigned as well, citing, the direction for the government has not been, very favorable with him, and he has resigned as well in the middle of Brexit negotiations and all that. So that also hasn't bode well for the British pound as we have currently. Now, if you look across board, in environments like this, you expect JPY to be supported. You expect currencies like the dollar to be supported, CHF to be supported, even Euro also slightly supported like currently as a funding currency at the moment, while on the other hand, you expect CAD to be weak, you expect AUD to be weak, you expect NZD to be weak as well, and that's what we have currently. Now, let's look at pairing this trend versus weakness and see if they provide any opportunities. Looking first of all at pounds JPY, right? Currently, risk of environment, like we were saying, where we are currently, where we're trading currently is just below. If you just look at this level as well, right? We're trading currently close to this lows, this around this 150 level. You can see it was also, key levels around here, but it's really messy because it's really at the lows, but I'd rather not be selling around these lows right now. This is a little bit messy, but like I said, it's still lower. I would prefer a pullback on this, be a pullback, maybe, anything back towards this round number around 150.5. I mean, that would also coincide with this, my moving averages I have on my screen, and I'll prefer that to downside. But looking at better pairs, CAD JPY is one interesting one to look out for as well, because what you're looking at right now is trying to pair weakness versus strength. And current, evidently, what we're seeing is weakness in something like CAD, in the hybrid currencies, and strength in JPY and the other safe haven currencies. If I want to look out for this as well, now we've broken below this round number around 88.00. That's a key one. And then, but you see that we're currently finding support. We're currently finding support at this overall lows right now. So in as much as, yes, downside is the way to go, is expected. At this lows though, it's a little bit tricky. If we could get a pullback, maybe a pullback towards this round number around, let's see, around 88.5. You can see was the lows going back to the 25th of November, similarly very close to or around the 14th about of December here, right? So if we could see that, I could prefer it, right? Looking for further downside for him from that level. But at these lows, I'm not really comfortable selling at the low, especially in a thinner market environment. Remember that we are heading into the holiday period. And obviously, lower liquidity is bound to be expected. It could, see lower volumes in the market, or we're seeing lower volumes in the market, and as such, moves could really become exacerbated or really become, market environment could really just be messy. So, in light of that, I'm not looking to be jumping into anything low quality just right now. There's nothing saying you should try to be a hero heading into Christmas, right? But obviously, what we have risk off, we have strength in JPY, strength in the USD and CHF, and weakness in the high beta currency. So if we looked at this, I wouldn't like this. I'll prefer a pullback on this, looking for downside, here. And reason why I also like CAD is downside for oil. Oil prices have been low as well. So obviously that also puts in for the downside pressure on this, and rotation back towards this round number would be a better way to go, right? Before I look to take, look at this. NZD-JPY, also another way to look at it. I like this one, is more interesting. Any pullbacks back towards this round number as well would also be interesting. Apart from the round number there, we also had Friday's lows. We had lows for a couple of sessions going back to, middle of December, around 13th, thereabouts of December. So I'll prefer this. It's also going to be coinciding with my, moving average here, the 51 here. So I prefer a pullback towards here. Any region, any rotation back towards this level would also be interesting for me in terms of further pushes to the downside in line with the current environment. AUD-JPY, also an interesting one, although at this level as well, I'll be very careful around here. You can see we are already trading at support. You can see support going back to the 14th. This 14th, let's see, 14th of December, similarly back to 25th of November. Key levels around here, I don't want to be caught selling at the lows. What I'd like to see, if we could get a clear out of this level, I'll prefer that. A clear out of this level, let's see. All right, if I can get a clear break of this, which we are currently looking at, currently still struggling around it, but a better, clearer breakout of this retest, then I would like to see a further push lower, or better still, a rotation back towards the moving average that I have here, also Friday's lows, as well as this key level that we have going back to the 15th of December. I'll prefer that than further looks to the downside. If I'm going to look at the dollar, on the dollar side, for the dollar is also a lot stronger, and we also had positive comments from Fed members on Friday, where one of them also said that, the reason why they're tapering faster is just to make rate hikes even come faster. That is very likely it comes out in March. The first rate hike comes out in March. And if it will be pushed further, maybe May, while other people are calling for about 3 hikes going into next year, which is super good for the USD, in line with risk of environment, which supports the dollar as well. So we can also look out for strength in the USD. I prefer it against the 3 commodity currencies in line with the current risk environment that we're having. If we see for example, looking at USD CAD, for example, I like this because oil prices are also lower, also helps with, what we have currently. So if we could see this also play out, what I like to see as well, we're already pushing higher, although we're already trading at the highs. I mean, the highs going back to the 15th of December as well. I would really not be excited about buying at the highs here, but any rotation back, I mean, if we could get pullbacks, right, on the short term, maybe back to this one, but I'll prefer something deeper, maybe back towards this region around, this is 1.285. I think that would be a better way, to go about this. But I also like further upside here in line with the current environment that we have. NZD USD, finally, before we go, also interesting, lows around here. Let's see. Okay, we could look at this level. I mean, that's not the cleanest, but I mean, we've broken below this level already. Friday's lows, key level of support around here. Rotation back here, interesting. Looking for further pushes to the downside. All in all, we're saying we have risk off. We're saying equities are lower, the VIX is higher, commodity currencies are down, commodities are also down. Silver currencies are higher. Current classic risk off. The only thing that we have to be careful about is the current time that we're trading in right now. It's more of a lower liquidity environment. That means that you need to be more careful, manage your risk even more. And then we have a super light economy calendar as well. It's light on no tier 1 data expected, later in the session as well for today. So, I mean, we just need to keep an eye out there, be careful, manage our risk, and make sure that we also, keep a tight lead on things, monitor the sentiment. If there is any shift, we will see, that reflects in the market. So we're going to leave that now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.